Welcome to the Money Huddle, a podcast that explores financial topics for families and small business owners. Hosted by Michael Baker and Ross Marinell. All opinions expressed by Michael and Ross or any podcast guests are solely their own opinions and may not reflect the opinions of Planners Alliance. The podcast recording is for informational purposes only and should not be relied upon for investment decisions. Clients of Planners Alliance may maintain positions in securities discussed on the program.
Welcome back to the Money Huddle. My name is Michael Baker, and I'm here with my boy, Ross Marinell. Ross, how you doing today?
Hey, I'm alive and kicking today. Feeling good. On the mend.
He's back from the post-surgery recovery. What did you learn about yourself?
So I don't like pain. I don't know what else.
To sum it up,
surgery is no fun, and I don't like IVs. But hey, look, I feel great. I have not, honest to goodness, had surgery last week to repair a deviated septum that has been, hasn't been functioning correctly for my whole life. And for the first time ever, I can breathe.
Right. So
it's amazing.
For our listeners, you got to tell them why it hasn't been functioning. What happened to you when you were little?
No. It's just the way I was born. Yeah.
Didn't you get hit in the face? I thought you got hit in the face with a baseball.
I thought that might have been the reason why, but no. It's just developmental. And got to give a shout out to Dr. Kelly, Fort Mill Cinta. They did a fantastic job.
They took care of you, huh?
Wonderful.
Awesome, man.
So you know what the story is.
So what's the lead today?
So go ahead. So you got to introduce this topic because since I've been in a little bit of a funk.
Gotcha. So this week there was a story that broke, or is breaking still, about current NFL football player Adrian Peterson, who, if you follow football, Adrian Peterson has he's been a perennial superstar player in the NFL for a long time. He's kind of on the downward, sunset years of his career. But
running backs don't age well.
He's one of the
great. Still kicking,
he's one of the all-time greats, though. And anyway, it came out that Adrian Peterson, who has probably made close to $100 million in salary and even millions more in endorsements, is deep in debt, and he's in trouble financially.
So this was a little eye-opening to read because of the size of the income that he's earned. They're estimating over $100 million in earnings between playing football and endorsements.
Correct.
And then to not have to be literally broke or on the verge of being broke is how this is being represented through the news articles. You got to scratch your head and wonder what has happened along the way that has allowed this to develop. What's the insight? Is there any feedback from what's happened? Is it swindling from?
Well, so far the attorneys have not commented because the case is ongoing, and obviously there's sensitive nature to what's happened. But the quote that was given was that he trusted the wrong people and trusted people that ripped him off. And so, obviously the story of the athlete who's made millions and is now broke is it's not uncommon. That's one of those things that unfortunately we see a lot. But here's what really surprised me.
Mm-hmm.
Okay. So the NFL actually, and the NBA may have as well, but I've known more about it through the NFL. The NFL actually has a program for certified financial planners where you have to pay a fee, but you go through this training where they teach you all the ins and outs of NFL contracts, how the players are compensated, the different.
Where the certified financial planners are teaching the athletes about managing.
No. This is for the NFL players.
Oh.
To say if you're a certified financial planner, that's number one. You have to be a CFP to do it, but you can pay to opt into this program where they will teach you and train you all the ins and outs of how the NFL contracts are worded, the different incentive plans, bonuses, basically all the ins and outs of NFL compensation. And if you come through that, and you have to sign over, a couple of different ways of how you would engage with players, but then you would be basically offered to the players as a list of, a certified financial planner who's been approved by NFL to, work with these athletes. And I thought it was pretty neat And, and so to me, it's like what astounds me is that type of stuff is available for these players. And you still hear of, who was the person that pumped the brakes for AP on any of this stuff, right? So who was that person?
So there are a couple of things come to mind for me when I hear about some of this high net worth. It's in it. The money's been lost, misappropriated, bad investments, whatever the case may be. You know what I think about? I think about Floyd Mayweather.
Oh, I thought you were getting ready to say Fire Festival.
Posting. Remember, this is a few years ago, but he
Right.
posted his ATM receipt to social
Oh, I
media.
know. I know.
He took a $400 withdrawal out of an ATM, and his bank balance was $99,864,000.
Wow.
And you'd probably think he gets maybe people poke fun at him for keeping that money in the bank and not investing it and not taking attempts to grow it. But guess what? He had $100 million in the bank.
This is true. Yeah,
And he's not going to go broke if you have $100 million in the bank.
Well, he spends money like it's on fire.
Exactly. I'm not. Yeah.
So the jury's still out about Floyd. He may have one or two more fights in it yet, just to see.
Here's the other thing I was thinking about too. This is, obviously we're reporting $100 million in income earned. That's gross income, right?
Right.
So after taxes, we know that gets cut down.
Yeah, it's not fair to AP to be like, oh, you've made $100 million, because he's had to pay tax. He's had to probably pay agents and managers, and Lord knows who else is on his payroll.
Sure.
That's a corporation type of revenue stream coming in.
Right.
So, I mean, that's not all the money that's been put in his pocket. But my big takeaway was on this, and this is kind of where I'm starting to come down on it. Obviously, unfortunately, I never learned what it was like to be a professional athlete.
Right.
So I can't, just put myself in their shoes and say, oh, I know what it's like to be 21 years old, 22 years old, and having, millions of dollars a year coming in. But what I can tell you is that it's so often to hear about these guys who it's a friend of a friend or the friend of an agent or this relative or that relative. I mean, heck, Lonzo Ball and his brothers,
they just had a falling out.
They just had a huge falling out of, with a friend of the family who they accused of swindling money. And so to me, it's like if you're a pro athlete or these leagues, if you will, the NFL, Major League Baseball, Major League Soccer, soccer's huge in Europe. The European soccer players get paid like NFL athletes and NBA athletes here. But these leagues, they need to start encouraging these athletes. Like, you need to have somebody that is not your friend, like literally like not your friend, and it's all business, and it's like that person needs to be your safety valve. And I'll, for the sake of fun and games, Linus, I'll name him Linus. It's like, if Linus thinks it's a good deal, then we'll talk. If Linus looks at it and says no go, that's it. The conversation's over. You got to have, and I think even probably multiple safety valves, where you got the tax person, you got the agent, you got the financial planner, you have the independent consultant, you got you got all these people, because somehow or another, this guy who's earned over $100 million is now in debt for several million.
Right.
And he's one bad tackle away from hanging up the cleats for good.
Whew.
So it's just, it kind of shocked me. It'll be interesting to see how it plays out. But I guess the more, for me, the moral of the story is like, I have to think of, he got insights from people that he was close to, maybe friends of the family, maybe relatives, and it just plays out. Even at the $100 million level, those are not the people you need to be getting financial advice and guidance and investment tips and all that stuff from. You need to have the professionals in there.
Got to have your network around you,
I agree.
and the family and friends that you trust to bounce
the higher,
ideas
the
off
higher
of,
the
that can be honest
stakes, the
with
more
you.
important, right?
Yeah. So what else you got kicking today?
Okay, so I was chuckling this week is because, as you know, we've kind of had our fun nitpicking at the IPO market this year.
Oh, yeah.
With stocks that are being taken public for the first time, and I think you have one too. But I sent this to you on Twitter, and there's a guy on Twitter that I follow. His name is Charlie Bilello, and this week it was funny because Charlie was going in on a company that recently went public called Beyond Meat. And
if you haven't heard,
if you haven't heard, meatless food is all the rage. So anyway, this is what he tweeted, and I just thought it was kind of
all right, give
astounding.
It to us.
So he tweeted out, he said, Beyond Meat now has a market cap that is $5 billion higher than Macy's. Beyond Meat was founded in 2009. It has 383 employees, and last year did $88 million in revenue. Versus Macy's, that was founded in 1858. It has 130,000 employees and did over $25 billion in revenue last year.
$25 billion.
$25 billion in revenue versus 80.
$25 billion in revenue last year. Beyond Meat did $88 million.
Right.
And has a higher market cap by 5. That is really that illustrates where we are.
Yeah.
With some of these IPOs today.
It has a $5 billion. It's got a $5 billion market cap. Greater market cap than Macy's, which I don't shop there a ton, but I mean I can literally hop in my car and ride up the road to Macy's, and it's
But those revenue numbers aren't even in the same hemisphere.
It's not even close.
It's not even close,
Yeah.
and that is just shows how dislocated a stock price can become from any valuation metric in any realm of reality that you might normally compare a stock price to.
No
whether it's
question.
price to sales or price to earnings, any of it. It's just so far out there. We're not even in the same globe any longer.
Right. And the thing with Beyond Meat, and I could be wrong because this is not really my forte. Obviously, I'm a meat eater, but a lot of the big food companies haven't even gotten really involved in that space yet. Like they're kind of, it's kind of cool to be somewhat first, but it's like, what's going to happen when all these other companies say, there's an area for us to grow into, and they start getting competition.
Right. Even if, apparently they're a recognizable name, right? Maybe that has some merit and there's some value to being the first and being recognized, but still where the stock market cap is versus the revenue is just, it's unbelievable.
There's a disconnect that's happening. No question.
So it was also recently reported that the WeWork co-founder.
Yeah.
So this is another potential IPO coming here soon. WeWork, their co-founder, this article says, this is the Wall Street Journal, has cashed out at least $700 million via sales and loans. So Adam Neumann has sold some of his WeWork stake and borrowed against some of his holdings, investing the proceeds in other real estate and startups. So how do you feel, Michael, that the CEO of a company that's about to go public is selling up to $700 million in stock and equity?
I mean, how do I feel about it? Well, I would.
Or what do you think it means for that IPO?
This is the thing. I would totally expect it because these people. I mean, obviously he's a CEO. I mean, was he the founder too? But these people, this is what I continue to feel like I see with these IPOs. It is a chance for the early stage seed capital, venture, VC investors to get out. And should we be surprised that they are doing that? I mean, if I was in that position, I would do that.
Right.
I can't fault the guy.
It's sort of
for ringing their cash register.
It could become a startling headline. Maybe it's a little bit of, we're trying to squeeze a story out of this, but if he has the ability to do that, why not? I don't really see that as being as problematic as the fact that maybe their sales and loss comparison.
Yeah.
Right. I kind of get back to, does that change our perception of the stock?
Right.
Or the potential, stock when it's released?
Who knows?
Out
and I mean, the thing, and that's why, as investors, we could be sitting here 5 years from now thinking WeWork is like, oh my gosh, they've just revolutionized how this whole thing, office co-working is done. It's changed the game forever. Or we could be like, oh, WeWork, that was an interesting experiment while it lasted. But it's kind of on the decline. We have no way of knowing, and so. On the two fronts, one, as an investor, this is why you don't go all in on one company. You need to have a broader approach for how you want to allocate your resources. But B, for the guys on the inside that have built this company and worked and built this company up, this is now their time to kind of harvest. And
Right.
so I fully expect them to do that. It doesn't mean that they believe in the vision any less, but can you honestly expect anybody that has been working and toiling and been completely devoted to something like that
For several years.
to not pull the lever
Right.
and ring the cash register?
Right.
You
Ring the
know,
bell. I actually
absolutely.
agree with you on
Yeah.
that, because I think there's been a stigma, maybe some pressure from private equity, venture capitalists,
Sure.
that you don't want the founders to cash out and lose their focus. And yeah, but they've worked years to get to that point as well.
Absolutely.
Again, I don't know that it would really shape my opinion of the stock any more than the fact that maybe it's over the listen to these numbers. So this was from CNBC. WeWork's revenue increased to $1.8 billion in 2018. So they did $1.8 billion in revenue, up from $886 million the prior year, which is a pretty substantial amount of growth. Over that same stretch, its net loss more than doubled to $1.9 billion. So again, what are we going to be focused on here? Is it the fact that this gentleman's cashed out a little, a chunk of money, or
Right.
that we're losing? That lost $1.9 billion.
I agree.
Last year.
It just obviously it's gonna make for a headline. Clearly it's gonna make for a headline. But to me, when I think about it, I'm just like, look, that guy, they deserve to, in a way, cash out, because I can't think of any small business owner, no matter how profitable or successful your business is, the right offer comes across the table, you're going to sell, right?
Right.
Just drive down the local highway here and you see all these different, businesses that we know or small business owners maybe doing very well known in the community. But if the right person walked in the door and said, hey, they got the checkbook out, you're selling. You're
Right.
going to do it, because you're like, why would I continue to take this personal risk to my personal, financial resources when I can cash out, right?
One more headline that popped
let's
up
get
this week, related to LSU. So
I saw
LSU
this.
had a very fiery kind of debate going on campus about these renovations
it's
to the
warranted.
football. So their football program received $28 million upgrade in the locker room, and they have transformed this locker room into truly a world-class experience where every player now has this individual pod that looks sort of like a first-class airline seat that reclines. It has technology associated with it, and it
All the
looks
ports.
magnificent. $28 million. So how do we feel about a football, just sort of the opulence of some of these programs?
Well, I mean, I know how I feel about it. It's like it does seem excessive, but when you start looking at the money that these big schools bring in, like Alabama, Clemson, LSU is a perennial powerhouse program. They're not the top right now in the SEC West, but I mean, they're a sniff away from being at the top of the heap. And so those big programs, man, they generate millions in revenue for the school. And so we've talked about this a little bit in the past, right?
Right.
Think about with Clemson. Clemson is doing great, wonderful, but they start winning national championships. What happens? Applications for people want to go to Clemson skyrocket. Demand is up. I mean, so there is an effect that's financial that is related to sports success.
Yeah.
But I know the second half of your story, so
well,
it's gonna be really bad that I'm kind of defending that when you tell me what the second half is.
Well, so that was that donation was
So was it a donation?
private. Yeah,
Okay.
It was a private donation from members of TAF, Football Alumni Association.
Well, in that case, to be fair, if it was a donation that was given, their hands may have been tied with how they spent the money.
It's still
because a lot of that comes with strings attached. Like, we want you to do this.
It still triggered a social media storm,
I'm sure.
and they showed in comparison parts of a library that were just looked tore up
bad.
and bad. And then people kind of were firing back and saying, well, there's been a lot of investment in the school. And so one of the things that got highlighted was a $114 million renovation just a couple of years ago for the College of Engineering. Yeah. And these facilities look amazing. And here we are talking about the debate of, is college going to be free?
Yeah.
How in the world can college be free if we're investing hundreds of millions of dollars on campuses? These don't look like schools. They look like museums.
Oh, I know. Yeah.
And how are we going to pay, and we want to know why there's 1.5 trillion in student loans.
Well, that's a whole nother rabbit hole to go down. But I agree with you. It's, in the perfect world, you'd like to see the athletic success at least translate over to the academic side, where everybody's kind of eating from that bowl, or at least tangibly, where it's very noticeable and you wouldn't have to like dig it out and say, oh, look, here's a benefit. But at the end of the day, college athletics, especially college football, is significant. I mean, there's so much money involved with that. It is kind of hard, which leads, that's why the people that have the argument about, should we be playing college athletes? Should some of these college athletes be getting paid?
I think there's a few things that spring from that, right? Obviously there's enough money in there to compensate these players for the risks that they're taking and the time that they dedicate to the team, but that's not really happening.
I'll tell you a quick story. My father-in-law, diehard Tar Heel fan, diehard North Carolina Tar Heel fan. In fact, when I was dating Elizabeth, he was like, look, just so you know, there's only one Carolina in this house. He's like, Carolina means
laid the law down from Jump Street.
North Carolina, and obviously, being from South Carolina, if you're in South Carolina, when you say Carolina, you're typically talking about Gamecocks. And he's like, there's only one Carolina. And we joke about that still. But yeah, so I've adopted the Tar Heels as one of my teams that I support. And he has this story that he tells over and over again. And it's about Jerry Stackhouse. And he's basically, Jerry Stackhouse played, was a college standout, lottery pick in the NBA.
I can't wait to hear this.
And anyway, he was telling a story about Dean Smith, because Jerry Stackhouse was, I believe, the first, or if not the first, one of the very first players that kind of broke the tradition at North Carolina of not staying and playing for like all 4 years. He left early to go to the NBA. And Dean Smith told the reporter who kind of posed a question like, well, what do you think about that? And he goes, Jerry Stackhouse is arguably the best college basketball player in the nation, and his mama's house is on cinder blocks. He has to borrow money from his friends to go buy pizza. I mean, he's so poor. His family was so poor.
Wow.
He's like, who am I to tell that kid
not to go make
don't
millions
go
of
sign
dollars,
a multi-million dollar contract and take care of your family? He's like, who am I to say that? And so that point is, a lot of these really star athletes, I mean, they come from very, very modest or very poor, humble beginnings. And
and they have the responsibility.
While we would say, I would say, oh man, free college education. It's like, man, sometimes these people are they are just playing by the rules long enough so that they can like go take care of their family, right? And so it's a hard thing to see when you see these. On the outside, you're like, oh, you should be happy that you're getting this free college education. Meanwhile, it's like they don't have because of the way the rules for the NC2A are, they can't. If you played college sports, it's a full-time job. So I mean, they don't have time to go, work and sling and hustle, and they can't make money on their likeness.
Right.
They can't sell their autograph and make some pocket money. So here, think about somebody like Zion Williamson. Everybody knew he was going number one. Everybody knew he was going to sign a big endorsement deal, which he just signed with Jordan Brand.
Right.
We all knew that. He's at Duke University, and probably eating in the cafeteria on the meal plan that they, what I mean.
Hey, look, let's say you're going to school for business, right? You're in the business school,
right?
And you're a junior, and you come up with an idea, and someone's willing to invest $30 million in that and go start your business, and you leave school early. Is anyone complaining?
Not at all.
No.
Not at all.
You're going to go pursue that.
You're going to be on the
passion.
cover of like Entrepreneur Magazine, probably.
Right. And I think seeing, listening to your Jerry Stackhouse story, it's the same thing.
Yeah.
His opportunity was to go play sports. You could have left to go and do anything.
Absolutely.
If you have a chance to make millions of dollars, then you leave.
No question.
And you do it.
No question.
So what else you got
All
this
right.
week?
So we've talked for a little while, but I'll get to the meat and potatoes of the podcast today, and it just works because we've talked about nothing but sports this time, staying true to the Money Huddle moniker. But at any rate, so this past week, something I've been waiting for a long time. Amazon Prime does a football series every year, All or Nothing. It's kind of like their version of Hard Knocks. Guess who? Do you know who the team was this year? The team this year was the Carolina Panthers.
Oh, okay.
So it's basically they follow the team throughout the season. The only downside of it is as a Panthers fan, it was last season. Ooh. And so we all know, if you're a Panthers fan, how that kind of went. But I'm fascinated with the behind-the-scenes stuff with professional sports. Just, to me, and I had this thought the other day, I was like, honestly, as a fan, I don't need to know nothing about their private life. These, all the stuff about who they're dating, who they're all that stuff is. But the behind the scenes stuff about their day to day,
right?
I'm fascinated.
The actual sports, the
leadership, let
training,
them have their private life. But you know what? I'll sit there and watch an hour program about them going in meetings and talking about strategy and how they're planning to scout this other team. I just think it's cool. Anyway, the one thing, there was so many cool takeaways. I'll probably try to write about it. But one of the takeaways that I want to talk about on the podcast was one of the narrators, and this is obviously the Panthers started out great last year. They were like 6-2. They looked like a world beater team that they were going to go to the playoffs, and then the wheels just came off the bus. And everyone's like wondering what is happening. And anyway, the narrator, he said during that span, he said that basically the Panthers had kind of experienced everything that you could experience. They had played really, really well and lost games that were close, and they had played terribly and actually won some games that they shouldn't have won. And it kind of got me thinking about how with investing, with your finances, that you can have some short-term success. You can make a terrible decision and it actually works out okay.
Right.
It doesn't mean that was a good decision.
Right.
You can also make very principled-based decisions and make wise choices that sometimes the outcomes don't work out well. And it doesn't mean that it was a bad decision. It just means the outcome was not what we had hoped for. And so that got me thinking about, results in the short run is like the thing that seems to matter, that matters the most, that I would stress to everybody, is the process. Because over time, if you have a good process for making sound, principled decisions, that's gonna outpace, maybe some bad luck along the way. But in the short run, if you're trying to focus on, results in a very short time frame with investing, or was this a good purchase, or was that a good move? Bad luck, all kinds of variables can come in. But the more you have a process that you work with over time, the better you're setting yourself up for long-term success.
So one of the ways we frame this is you control what you can control.
Exactly.
Right. And this is, JP Morgan had a great slide on this a few years back, where if you just kind of think as retirement as the center hub, right, there's a couple of things that we have significant control over. Yeah, almost total control, but significant control, right? That's saving versus spending, and that's our asset allocation. So those are the two things. If you just think big picture, we have a lot of control over how much we spend. We have a lot of control over how we allocate our investments. So particularly retirement investments. What I mean by that is, how much do you have in equities? How much do you have in safer alternatives like fixed income, right? So if you're younger, maybe you have 80-90% of your money invested in equities. You're taking control over that asset allocation. What you can't control and what's out of your control is market returns, policy regarding tax, savings. So you could be doing everything correctly to your plan, taking the risks that you want to take in saving the amount that you want, and still not have the desired result, because that result was out of your control.
Exactly. Yeah. We only get to control the inputs, and so that's one of those things where it's like, playing sports, your coaches always talk about, how you practice, you play how you practice. But, I've been in plenty of games where we had a great week of practice, and you get in the game and just things don't go, the way that you thought they were going to go. And so I think about this from a financial standpoint. It's just like what you said, 100% about what can we control. But it also is like just your everyday life, like, automating your savings, automating your rebalancing in your 401k, everything that you can kind of put into your process and delegate away where you're not actively making a choice. Because we get calls, all the time about, hey, I'm thinking about contributing, this year. Should I do that? Should I not? And it's like, how much easier is it in the long run to say, nope, I'm saving this and I set it on autopilot, and then you live on the rest, versus doing your lifestyle and then saying, oh, well, can we save, or should we do that? Can I afford this? Can I afford that? And it's like, well, what are we looking at after you've outlined your goals and the process and the steps you're gonna take to try to get to those goals?
Right.
What are we working at this left?
That's
what's discretionary?
Right. That's one of the things we've talked about in other areas, right?
Absolutely.
Which is pay yourself first. And if you're doing that and it's set up and it's established from the beginning of the year, and that money is then contributed to wherever it's going, whether it's your 401k, IRA, HSA account, whatever it might be, then you've paid yourself. Now everything that's left, is there for you to kind of enjoy, consume,
Certainly.
live your life. But paying yourself first is essential, I think, to build that habit. And maybe when you get a little bit more seasoned at saving and you're comfortable with saving 20, whatever you're able to do, then maybe you can take some of that automation
I think you
out.
nailed it. I think you nailed it, because it's like doing the process. What the process does is it creates those habits. It creates those habits over time, because I cannot imagine how difficult it would be for someone who is maybe 50 years old and they're like, okay, now I'm going to get serious about saving for retirement, or now I'm going to get serious about, saving for, this financial goal. And you're doing the math and you're like, oh, okay, well, we could probably make that happen. You got to start saving $2,500 a month.
Right.
So anyway.
So real quick, were you impressed with the leadership of the coaching staff and the team?
I was, one of the things that I kind of took away when I was watching the program was how likable Ron Rivera was.
Mm-hmm.
Like, he seemed just like a player's coach. And I thought it really showed a side of Cam Newton. Cam Newton gets caricatured a lot in the media just because of his outfits and stuff. And people are like, is he just a big kid? But it showed kind of the more business side of Cam. But I thought overall, one of the things that noticed is, like, once the slide started to happen and they were losing games, the season kind of sped up very quickly. It was like, oh, there's not a lot of really good content here.
Well,
so it was neat to see. It was neat to see.
So I watched the Hard Knocks, or I started to, with the Browns from last season.
Of course, yeah, it was great.
Not impressed.
You didn't like it?
Well, not impressed.
Well, they fired Hugh in the middle of the season. So, but I liked. I mean, they still had all the cool stuff. Anyway,
but I'll check out the Panthers one.
I binge watched it. I legitimately binge watched it. Could not watch it fast enough. A, because I love the behind the scenes stuff, and B, it was because it's our hometown team here right outside of Charlotte. So anyway, as always, let's do a quick recap. Just to kind of, because we've been a little bit all over the place today. But so first off, Adrian Peterson has made hundreds of millions of dollars, and now he's millions. He owes millions, and he's in lawsuits. But with creditors, where he owes millions of dollars, and you're like, how do we get here? He took bad advice. So always consider the source and look for those people that are professionals. It's cool to ask friends and family what they're doing. We know people are going to do it anyway. But if your friends and family members haven't made their career in financial planning and investment, management, wealth management, you need to go seek out professional guidance.
If it doesn't feel right, it's not right.
If it doesn't feel right, it's not right. And then we talked a little bit about Beyond Meat and WeWork. Obviously, it's neat to see some of these companies that have their IPOs happening and see some of the innovation that's taking place. But we still feel that, be very cautious. Of course, we're not giving investment advice. What you do with your money, we feel like should always be done in the context of a plan. But you'll see these stories about these companies, and it's always interesting to look at like the real facts and like what the headlines are, what the sizzle in the marketplace would show you. And then, lastly, we talked about the Carolina Panthers, the All or Nothing. It's a great show. I highly recommend you watch it if you like football, and if you like the Panthers, you'll love it. Unfortunately, the season wasn't that great last year. But one of the things that kind of I want to put to all this listeners was, that you can do the right things and still not have results that are great. You can also do the wrong things and sometimes have, results that are lucky. And the thing is it's hard to determine if you were lucky or you were good. What helps you determine that is your process. If you have a solid process for how you make decisions, if you automate things away, if you're working constantly and you have and refining that process toward whatever goal you're trying to make. If it's health goals, great. If it's financial goals, great. If it's family and lifestyle goals, wonderful. But that process is going to give you the greater chance of success over the long term than any short run results. So, as always, we thank you for listening. You can catch us on our Facebook page, The Money Huddle. You can email us, themoneyhuddle@vcplanning.com. If you like what you heard, give us a shout out, send us a question. We'd love to hear your thoughts and feedback, and we'll talk to you next time.